All right, this is the first recording, guys. Here we are. Um, Now we're good here, right? Yep, everyone's here. All right, now let's go into this week. Let's restart this. All right, I'm gonna have to repeat myself for the third time, but it's okay. So what are we're always gonna ask what the previous week did, right? So we see that the previous week or the previous 2 weeks have expanded in one direction, and typically when you expand into something relevant, so what would be the relevant level? It's this weekly swing point or this higher time frame key level where you see Euro take this out. So you have a large expansion range into a key level with SMT. This is when we can definitely expect a new Visa price. So coming into Monday, I'm already expecting this. Now, if we're going to reverse, though, this key level is not enough, right? We can kind of refine this level because when I look at the previous day, it's clearly not a reversal candle. So what would be the perfect level to reverse from? It would actually be the previous week's low. That would be perfect, right? Because the previous week created that, but it didn't reverse. So I want to use this as a reversal point. Um, so that's my logic, right? I want to reverse off this low, but also why would I be bearish? Uh, or why would I be bullish as well? Even if this week here that we're seeing was going to be bearish, what would it do first early on in the week? It would typically open high first. So I'm trading Monday, so early on in the week, if I'm trading Monday, I would expect it to open high first, even if we're going to be bearish. So that's why it's a one-sided narrative. Are we good here? Let me make sure we're good. All right. So I would already be one-sided bullish. Does that make sense to everyone? So when I come into the day and I see the day opens low first, right? And I don't know if we put it in SMT here. I kind of forget. No, I don't think we do. Okay, we do with the previous week's low. It's a bit weird, but the previous week low is just a different day. It's not on Friday on silver. But here's that previous week low. So you're seeing that this asset is actually in premium of its range in a gap, while this asset is very, very low in the range, and we create an SMT here, right? So here, why am I trading Asia? We're going to see that we expand away from the current day's low. So when you expand away from a true reversal or a manipulation, etc., that expansion away, you want it to look a certain way, right? We want to see displacement. So that displacement is going to create gaps. So we want to see these gaps hold price to basically continue from to our objective. I can't talk. So as you see, if we play price a little bit forward, we create a gap here. Where on other assets, so like silver, we don't even hit a gap. So this is called SMT fill. It's just a fancy word for one asset trades into a gap and the other asset doesn't. And the way you want this to form ideally is with like the most local fair value gap typically, right? So like if there's, let's say there's like 3 gaps or something. Just like close range gaps is all I'm trying to say. Let's say there's 2 gaps. There's one right here and there's one right here. Ideally, I want to see that form right here, right? Because we want to see shallow retracements. So I want to see that SMT with this gap, the most recent one. If there's like 5 gaps in here, I don't care if there's an SMT with this gap all the way. I don't really care about that. It's really just with the most recent gap. That's how I use it at least. So that's what we have here. So why can I also expect a continuation is because look at what we're leaving behind is equal highs. So if we're going to leave equal highs behind and we start to leave that level, so when you leave behind retreat, or when you leave behind failure swings, or when you leave a consolidation, we are already have this preconceived notion that this should be a retracements. This should be a higher time from retracement because price typically does not leave consolidations or doesn't leave failure swings. So there's always going to be some sort of invalidation to that. So meaning if this is going to be a retracement, then this gap here would have to hold. We want to see this hold, especially when you have an SMT here. So this should end that retracement to have that continuation. That's my logic here. So here's your first SMT. And like I said, we have the daily opening low first. We have that reversal signature. So it's very, very one-sided here, especially when I drop to lower time frames. If you can see, this is simply a consolidation. We have that expansion, mouth expansion. We have consolidation, manipulation, expansion, consolidation here. Expansion, consolidation, and then here's your manipulation. So as you see, lower time frame phases of price, very, very bullish. And then we hit a key level, so we're already expecting a reversal. When I drop lower, you're going to see that two-stage SMT. So when I go to Euro, you're seeing that this low, I don't know why on this feed, it doesn't take this out. If I pull up another feed, and I was not using this feed, it's a bit weird. Maybe this asset does or something. Maybe this asset does. Holy shit, this looks so ugly. Euro. Let me pull up another one. XAU. At this point, I was using like a wand or some shit. Yeah, it's a bit weird, but as you see, there's a divergence here. I don't know why it does that. That's just some CFD shit. But as you see, we have this SMT, which this is what I was seeing at the time. So you have a 2-stage SMT to me. But really, to put it simply, what do we have away from this reversal to lows? We have a gap that gets created. So this is what I want to see. So expansion, method expansion on the weakest asset that creates a lower low. So that is a reversal signature, right? So this is what I enter on or around here. You guys saw me. And then where's my TP? Here's one potential TP, but if I go to the 4-hour chart, if I remember, there's like a, yeah. As you see, price was just consolidating in between one candle. So this is viewed as consolidation. So really what you have is expansion. That expansion creates the SMT. We do not reverse, we consolidate. So we would be looking at AMD reversal. There's two types of AMDs. There's an expansion into a key level. We do not get expansion with expansion or expansion reversal expansion. We get consolidation. So now you have to reverse from here. This is your AMD reversal. There's also AMD continuation, where we're expanding to a draw liquidity or something. We consolidate, and then we manipulate to continue away from there, which creates a protected swing within higher time frame expansion, which is what you want to trade ideally. Like this is the probably most high probable scenario. But here's AMD reversal, like I said. And this was my target here, which is that 4-hour high. And yeah, that's what I TP to. Around, it looks something like this. I think I put my stop loss like down here. I don't really remember, but yeah, it was something like that. Does that make sense to everyone? So far? Dude, I'm not trolling. I don't know what just happened there, dude. Makes sense, everyone? I bet. Now, I kind of forgot what else I entered that day. Looks like I entered CL as well. A bit of the same thing. Yeah, let's go to CL here. Can you go over how to find daily bias? Yes. That's what I'm kind of doing though in these trader caps. So if I go to CL here on the same day, if I go to the daily chart, you're going to see a 2-stage SMT. Spari play. Bro. Alright, so here's the 2-stage SMT. I've told you guys strength switch 2-stage SMT can be found on just swing points itself. So the first cracking correlation will be between candle 1 and candle 2. That's what you're seeing here. And the next cracking correlation will be between candle 2 and candle 3, like this. So you see it's a strength switch, right? Now when I go to the lower time frame, what do I have here? How do I want this daily candle to form? Just like that gold trade. This is how I'm getting biased, by the way. I'm looking at candle profiles and stuff like that, right? So if I look at this candle profile, I can't remember what asset I traded it on. Oh yeah. Sorry, this dog. It's like raining. Dogs go outside and shit. So here's 1800. It opens low first. We have that expansion with expansion, right? If this is gonna be a low day, And what else did we do, guys? We put in a fair value gap, or we displaced away from the SMT, which validates it, which confirms. So as soon as you get an SMT or something like that, and you have a true reversal, it has to expand somewhere. That expansion will always be in the form, or that draw liquidity, that's somewhere where you have to go, is always going to be in the form of highs and lows, typically. So that's what we have here. You have this high here, right, where we retrace into its. Wait, this isn't. What the fuck? Oh, I traded London too. Holy shit, I was a demon this day. So this is London session. As you see, we trade into this level, and I remember I was holding this, which this is like a half win technically. So it's holding to obviously like these draws in liquidity. I don't know why. I don't even remember why I was awake at this time, but I was. But as you see, we put in a reversal here. And yeah, we put in this CSD. I mean, this is a standard fractal model stuff. I have to see if there's an SMT or anything like that, but let's go look. SMT with this gap? I don't think so. Nah. We do have a type of, let me see. What time is this? 1400. Yes, we do have a type of strength switch. So as you see, this asset puts in a lower low. Well, this asset puts in a higher high. But this candle here is bearish when it should be bullish because it's a stronger asset, right? Where this asset puts in a bullish candle. So that is a cracking correlation itself. And this is what I entered on somewhere around here to get to this high. So I think there's like 2R almost. So I TP'd that 2R, and then I went to sleep at this point. So I'd set my stop loss to break even. And then I was looking for all these, but you're going to see that price just comes back to my entry here. So that was my second trade of the day. Right? Pretty simple. Nothing really crazy there. But yeah, my first TP was this relevant high, really. Does that make sense to everyone? That's a pretty simple one. So yeah, what else did I take that day? That was it for Monday. Does that make sense? And now we're gonna get into some questions. So, okay, this is just all that stuff. Yeah, third time's a charm for real. Why are they like adding you guys? They're like adding Nico and Kiko. Yes, you want some sauce and phase the price? Sure. Alright, so this is typically it's pretty simple. So I would ideally pair phase the price with like relevant highs and lows. So what I mean by that is let's just draw out some like depiction or something, like, I don't know. Let's say, man, how do I draw this, brother? Let's do this. All right, let's do something like this, right? So when you hit a relevant level, so this would be like a relevant level or a relevant swing. There's spaced out highs and lows. So you can learn this in the expansion model course, because I definitely do use it. So when you hit a relevant high or low, or even like a key level in general, you want to see a reversal signature. So there's a couple of reversal signatures. It's obviously like expansion with expansion, but it's also just a swing point. That's the first step, right? Is having that swing point. But when you also hit a key level or a relevant level, you also want to see SMT, ideally, right? So that would indicate a reversal signature. When you have like an SMT, a two-stage SMT, that reversal signature, those are what you want to see. But what if you consolidate like this? If you consolidate, well, then your invalidation point for reversal moves to here. It's no longer here. We already hit this level. It would be this level because we don't want to trade away from failure swings. So this is what I'm talking about with the A and B reversal. It had to be like this, right? It would have to be something like that. So if you manipulate this level, for example, let me try to draw this a little bit better. Let's say you manipulate this level, and you want to get to here. So anything opposing to your overall drawn liquidity, so like all these highs here, you want to see these get failed. You want to see a failure to manipulate these highs to get to your drawn liquidity. So what I mean by that is you want to see price displaced through these highs or we want to see a consolidation signature here, because typically a consolidation signature is not a reversal signature. So if you consolidate, or maybe you put in a retracement here, that's a really good sign that we will continue towards your general liquidity. What you do not want to see is like some form of like SMT here, right? Where we expand away. Then typically, if you fail to manipulate this low, where are you going to go? You probably go to this low, which is the same logic that you're seeing right here. If you're not going to manipulate this high, you go to the next to draw on liquidity, right? Which is these highs, right? But same thing if you fail to manipulate this relevant low right here. If you fail to manipulate this level, where can your next draw on liquidity be? This low down here, right? Typically, right? And this can be, relevant highs and lows can be used a lot of different ways. So here's the next way you can do. So intra candle, let's say that the daily just opens high first, or maybe the weekly opens high first. That expansion away from the opening price is going to create invalidation levels. So fair value gaps, or maybe in the form of a relevant low, like this. So if this is the daily open, kind of mark that line. If this is going to be the daily, if this is going to be the current day low, then what do we have to do when we engage at this level? What does price have to do? It has to manipulate it to continue higher, because if it doesn't do that, then this daily open can be like used as a draw on liquidity. Does that make sense? And we can go over plenty of examples of that. Let's go over some examples of that. I can kind of refer to some, like right here, for example. There's a couple just within this piece of price action. Here's like a decent one. So we manipulate this low. So if I've showed you guys this sequence of reversal where we're looking at correlated assets. So if you look at this lower here, go to HO. We hit this low a long time ago, as you see, but we failed to reverse from it. So that typically means that the stronger assets, or the lagging assets that have not hit this low, will actually hit that low because we failed to manipulate it. But when the lagging assets trade into this low, as you see, we hit this low on Friday, where HO is all the way down here, where we hit that low on Thursday. Clearly failed to manipulate it. But when the lagging asset trades into it, this is when price can reverse on, typically, right? Or reverse or retracement. So we get that here. And we kind of expand away from the opening price. So Monday is the low of the week. And this low of the week is created very early on the candle. Literally 1800. So it can be hard to trust this as the low of the week. But as you let the week develop, when price expands away from that opening price, it's going to create new key levels. So I actually have I have these slides right here already done pretty much. So what I mean by that is intra candle. So this is in continuation. Intra candle, we expand away from the opening price, which then creates a key level above the opening price to be used as a continuation level. So it's basically like you have the current week's low here, and you have a key level above the weekly open. So this is kind of like protecting the current week's low because we have a key level above it. So that's exactly what you see right here. The previous day expanded or whatnot. Monday expands, Tuesday expands, creating that gap in price on the daily chart. So that's what you see here. You have Friday trading into a level. Friday trading into level. Monday, Tuesday expansion, which creates a gap above the weekly open. So if this is going to be the low of the week, what needs to hold? This needs to hold. This fair value gap needs to hold, right? And also, what would cap off this retracement? Because when we leave equal highs like this, we're already, when price leaves like this area, we're already anticipating price to do what? Probably, it's probably a retracement, right? Because we don't typically do what? We don't typically reverse from equal highs or consolidation. So this is where we look for the most like local key level to kind of cap off that retracement. So there's a couple of reasons why this would kind of be a level to cap off the retracement. There's two reasons why. So one, I already told you, we already went over that, is it's obviously reversing from equal highs. It doesn't really make sense. There's no SMT here. So when we retrace back this key level, this is what should continue higher, right? So it's just like expansion, retracement, expansion. But another reason why is because the way this weekly candle is forming, we already have like traded very far away from this opening price. So what does that typically not support? typically does not support a bearish move anyways, right? So this would be that key level basically printed within the above the opening price we can continue away from, which is really just in the form of a relevant low, as you see. It's a lower time frame relevant low. And I've already told you guys this as well. We just went over it down here. Sorry if you can hear these puppies, they're just yapping, bro. We talked about this here being used, or we talked about lagging asset trading into low. When it breaks the SMT, it can be used as a reversal. This is what you're seeing here. When we go to RB, look at that same low. We traded way past it, as you see. We did not manipulate it, right? But as soon as CL manipulates it, this is when price reverses. When I go to HO, look what we have, an SMT. So I've told you guys this exact sequence verbatim, where one asset will fail to manipulate, the other one, the lagging asset, will trade into it, and the third asset within a triad will create an SMT. So that's what you're seeing here as well. If you look right here, you're seeing the same thing here. I do believe so, at least. If I go to RB, yeah, you're seeing an SMT here. You're seeing that CL failed to manipulate its high. Clearly, it failed to manipulate its high. So does that mean the lagging assets should catch up? But this is when only one of the lagging assets catch up. So you see when it breaks that SMT, this is when we reverse. So I don't just like make these sequences up. These are really, this is what happens, repeats, right? And that's just like one of the sequences that I've taught you guys. But anyways, that's one way we would kind of continue away from or use that key level within the same range. So this is what's called, I just call it intra-candle continuation. It can look a couple of different ways, like I said. It can look like this, where Monday, Tuesday, Wednesday expand, which leaves a level like this, where Thursday and Friday continue away from. I'll show you an example of that. This can look, you can do the same thing via sessions. That happens almost every day, especially when Asia is low of day. A lot of people get confused on how to trade Asia. I'll show you an example right here that I traded. So if you go to this day in particular, I'll show you this. So if Asia's low of day and we expand away from an Asia session, or it can even be like London low of day, it doesn't matter. It's that expansion away from the opening price, or away from the current candle's low, which is, this is the daily candle. It's always going to create an invalidation point. So in this case, it'd be like a relevant low that's created above the opening price or above the current low of the day, which if this is going to be the low of day, doesn't matter what time it is, this has to hold, right? This would have to hold for it to continue higher. Man, these dogs, man. Sorry if you can hear that. So let's go over the narrative, like why would we even be bullish this day? Well, it's like I mentioned earlier. What does the weekly candle look like? It's already a bullish expansion candle, so typically we want to trade in that same direction, especially if we get a continuation signature. Why is this a continuation signature? Well, look how all assets trade into this high. We're ES and NQ. Look at the previous close, guys. Clearly not a manipulation of this high that we're seeing, right? If we go to ES, it's pretty much the same thing. We have a very small range candle after a large expansion. But if you look at the weakest asset here, even the weakest asset is not showing a reversal signature. Why? Very small range candle. But if I go to lower time frame, we're leaving a consolidation on the weakest asset. So what does that typically mean? When we leave a consolidation, leave equal highs, equal lows, typically that's a higher time frame retracement, right? So that's what we see here. So you're going to see that Asia is actually low of day here. So a lot of people will think that this is a reason to go lower. This is what they're seeing. They're seeing the day's opening high first. We put an SMT here. That's what they're seeing, right? We have SMT here. But we already know this SMT is fake, right? I already taught you guys this. When an asset trades into a higher low, fails to manipulate it. As you see, clearly it failed to manipulate on both assets here. What does that typically mean? The SMT will break, right? So we already know that price left a consolidation. It's failing to manipulate on the other assets. So we can already have a predetermined bullish bias here. So here we have 8:30 news. So if this is gonna be low of day and we have 8:30 news, I want to trade bullish, right? Obviously, I want to trade a continuation. But if we're not within a swing point, or if we're not within a key level, we haven't hit a key level prior to the driver to continue away from. So we obviously need a continuation away from a key level towards our draw on liquidity. Then I want the driver to basically trade into a key level to continue away from. What key level could that be? Well, what do we have? We kind of zoom in here. We have this fair value gap here, this relevant low. Just like these lows in general, right? They're pretty spaced out. If I go to the 4-hour time frame, it's just a gap. So we're creating a gap or a relevant level above the current day's low. So when this gets traded into, this has to hold. This has to hold, right? If it doesn't hold, then obviously we can't trade this day, right? We can't trade this day bullishly. That would be an invalidation to the bullish bias. So when you hit this level and you create a strength switch, so I'm going to show you. So basically 8:30 trade into this level. And what is it doing? It's reversing from the key level. This is exactly how I teach it in the driver video on my YouTube or the driver stream, whichever one you watch, does the same thing pretty much. But that's what we have here, right? We're having a reversal candle away from that. We're pairing a reversal with a driver within daily continuation. But it's also a strength switch. Why is it a strength switch? Bullish candle when it's clearly the weaker asset. Over here it's a bearish candle, right? So that's a strength switch. And when I go to lower time frame, we have a clear opposing candle that 8:30 created. So this is when I take a positional entry because I have a lot of things going for me. I have 8:30 pairing that with the driver. I have a strength switch. I have an open draw on liquidity. I have a bulky opposing candle. So I don't really need to wait for anything else, really. I can trust this opposing candle to support price at 9:30. And this is what I took at 9:30. You're going to see there's rips within one candle. And that's where I TP'd there. So yeah, that's an example of price forming an invalidation point above the current day's low. So if you never can trust the current day's low, maybe there's always going to be something, right, to reverse from. That's kind of what I'm trying to get across here. I have another pretty good example here. Just within, oh yeah, here it is. So here, this is that Tuesday. So here's Monday, expanding away. So here's an SMT here down here. We expand away on Tuesday. So obviously we want to target this high, etc. But what we're going to see is that Monday is the low, or sorry, not Monday. 1800 is the low of the day here. Right? So a lot of people would think that we're opening high first, we put in a reversal here, a reversal candle, and we can expand lower, right, at 10 a.m. or something. It looks really good, but what would need to hold? What do we have above that daily open? We have this fair value gap. So we have 1800 expanding higher, 2200 also expanding higher, which creates a gap, right, with the previous day's 4-hour candle. So it's basically this, what you're seeing actually, like literally this right here, but within 4-hour candles. So here's a 4-hour candle. Here's the daily open. This is 1800. This is 2200. That's what you're seeing here, right? So if this is going to be the current low of day, this has to hold, right? So when we retrace into this level, we have an SMT there, and then a 2-stage SMT there. And then again, using drivers, the most consistent thing you will ever use. If we're in a key level prior to a driver, we're in that 4-hour fair value gap. We have that SMT. We have reasons to go higher, essentially. The daily candle is already supporting expansion. We have this very large expansion higher. There's multiple reasons why we would expect higher prices, right? We still have that daily draw on liquidity up here, etc. The daily candle does not, the wick size does not support a bullish day, so it really even supports a bullish continuation because this is very lackluster, right? Which generally supports a retracement signature. But anyways, when you get to this level, what do I want to see? So going back to phases of price, I want to see reversal signatures. So SMT is one of them, like I said, but also that expansion, melt expansion signature. You see that? That would be a reversal signature. Here's your 2-stage SMT. Like I said, if you're in a key level prior to your driver, the driver hasn't yet reversed, price hasn't yet reversed from the key level, then the driver needs to reverse price. You see exactly at 10 a.m. we expand away. So that would be added confluence, which is what I took, but I took it on YM because it was a bit stronger rate, because obviously this is creating a lower low. But what do we want to see? The asset that creates a lower low? We want to see it do this. We want to see it reverse as well, which is what I teach. So yeah, that's a little bit on phase of price. There's a lot of ways to use it. If I go to this day here, like I mentioned earlier, within candles, you will have Monday open here. So let's just go back a little bit. I think it was like with this asset or something. Yeah, here it is. So see this divergence here on a Monday. So boom, you have a Monday manipulation. So just going back to phase of price, obviously this candle close on Monday is clearly a reversal signature, right? So what we expect Tuesday to do, expand. So Tuesday expands, so Monday, Tuesday expansion, essentially. And now we're looking at phase of price. Whenever we hit a key level, a relevant low. Because if you don't manipulate this low, where can you go? This low. So going back to that thing I just mentioned, probably a little bit early on the stream to answer your questions, a little bit early in the question, but this is what I was going over. And now we're just adding the weekly profile. So Monday, Tuesday expansion into a low. What do? We consolidate. You see this very small range candle? This is not a manipulation signature. So if you're not going to manipulate from this level, I would view this as a consolidation or retracement. So what could cap off that retracement is a key level, right? Which is just a consolidation high. So see how Monday, Tuesday, Wednesday, what are they creating? They're creating a gap or some sort of relevant level. They're creating some sort of invalidation level for continuation. So that's what we have here. Exactly what you see here is what you see right here. Right? Monday, Tuesday, Wednesday, expansion. So when we engage with this fair value gap, what do I want to see? I want to see price continue away from, right? I want to see that weekly continuation. The weekly candle is already supporting a bearish candle, right? Look at how far we displace away from that opening price. So I'm already really anticipating bearishness as well. But yeah, combine that phase of price and whatnot. And then when you put an SMT right here, if I go to both Euro and GBP, what are we leaving behind? Equal lows. We have a divergence here. Go to Euro. Same thing. We have all these lows here, as well as this SMT. So you're getting SMT fill, right, where one asset trades into a gap, the other one doesn't, which is a very, very good signature to see. So this is what I traded this day. So we also have 8:30 news this day as well. This is where we use strength switching, drivers, etc. So what do we have here? If I go to the 4-hour chart, here's the daily open. Asia session doesn't really do anything. We kind of take out this candle's high, this candle's low, this candle's high. This is very consolidative. But what you're seeing is we have this divergence. We do not manipulate this level, right? Which is kind of a red flag, but here's the strength switch. So here you clearly see a London reversal using the 4-hour profiles. So anticipating this expansion, but what we want to do is look inside of this 4-hour candle right here. You're going to see strength switching. So remember, we don't trust this SMT until we get some sort of reversal signature. So this is what you're seeing. You see this expansion away from here. Or if I go to like Euro, there is not as much expansion. As you have a small gap, but even on this asset that's weaker, we have no gap here. So there's no gap, no gap. Where on this asset, the strongest asset, we create, what the hell? Oh my god, what the fuck is happening? Whoops. We create a gap here, clearly, and it's the biggest size gap. So that's, remember, we can measure strength switch a couple ways. Gap size, 2-stage SMT, etc. So that's what we have here. So what we do is you trade into this gap. We want to see this hold, obviously, right? We start to expand away. Now, what you're seeing here, if I go back to my little slides here, as far as invalidation points away from a key level, remember when I taught you guys about invalidations in general, when price trades into a gap, for example, or anything really, When we create a swing point, 3 candle formation, we want to see price expand away from it, right? As soon as you create that swing point. But what happens if we do not expand away from that swing point? The swing point itself actually creates something to reverse from. It creates a relevant swing. When manipulated, creates a protected swing. So using that same logic, it's the same thing if even for like opposing candles. Let's say you have an opposing candle created. If this is your first invalidation level, we want to see this opposing candle be obviously supported. We want to see that hold on like the hourly 30-minute time frame. But if it doesn't hold, what's your like last basically your last line of defense? It's this low because it's still a relevant low, right? So when manipulated, that can be used as continuation. That's what you're seeing here, right? Price creates a range, and I think it creates a fair value gap maybe. Okay, no, it doesn't. We just have like this opposing candle that we can continue away from. But if it doesn't support price, then this high needs to be manipulated. You see that? Because it's a relevant high. Because if this is going to be the current high of day, this is your last line of defense. It's really two areas like I mentioned. This opposing candle. If I go to the 15-minute time frame, it's probably a gap. Yeah, you kind of see it a little bit better. You see like this fair value gap pretty much, or the high that created it. So that's what we have here. We have price trading into it. There's really no SMT here, but we manipulate prior to the driver. So again, if you manipulate, or if you're in a key level prior to the driver, and we haven't yet reversed, so we have not yet reversed because we hit, like with this 30-minute candle, we hit this high, like basically the last 3-minute candle, the last couple minutes within the candle. So it doesn't have enough time to reverse, right? So when should it reverse? As soon as the driver opens. So here's 8:30, it should expand away. So when it expands away, this is what is confirming reversal. Look what phase of price we get. Expansion with expansion, kind of like that V-shaped signature. So that's what I'm seeing here, and that's what I enter on. I don't wait for any candle close, guys, because I don't need it. Here you have a candle 2. You guys already know wick size when it comes to drivers. It doesn't really matter because you have the volatility within that candle. So if you're going to trade a 6 a.m. candle or something, has a large wick, if you have like a manipulation with the driver or anything like that with the driver, you can still trade it because we have that volatility to also expand with that large wick. So that's the way I typically fade 4-hour candles with large wicks, or even hourly candles or whatever. Here you have a swing point where we don't even take out this candle's high, but I'm not really requiring that. As you see, I don't think any of these assets take out these highs. Yeah, none of the assets take out the high, none of them create a swing point. That's not really what matters to me. What matters to me is we want to trade a reversal. That's what swing point is confirming, but this phase of price confirms the reversal, the expansion with expansion. That's what matters to me. I'm already within a 4-hour expansion candle, and then I have the driver also expanding away. So you see how I have like additional confluences, a bunch of failure swings. Like look at all these failure swings. Like there's just too many confluences to get missed here, in my opinion. So when you get a little bit more experience, you can kind of bend the rules. That's what I do. As you guys know, I will trade like candle 2s, etc., but with good intention. Like they still make sense to do. So I'm TPing at this previous low. That's because there's an SMT at this low. And I have a lot to show you guys about daily ranges, weekly ranges. A lot of times they can be capped off by SMTs. So I just used up the whole fucking time there, low key. But sorry to answer your question. That was probably like 30 minutes. Could you go over how to filter high level setups besides SMT? Yeah. So just to cover that quickly, because we don't have a lot of time. So not only is SMT a good filter for price, there's really like 3 that I can really think of off the top of my head. There's candle profiles. So if I want to be bullish, I want the day to open low first, right? So it's the candle profiles. It's also the wick size, the daily wick size. So those are the two filters for price right there, and those are some of the easiest ones to identify. That's the first thing I look at when I come into the charts. I look at the wick size. I look at the candle profile. The next thing I look at is phases of price. So this can be looked back at when you look at the previous sessions. Did they trade it into anything relevant? So for example, here's a swing low. Let's say London sessions traded into it. do I see a reversal signature like that, or do I see consolidation like this? If I see consolidation, well, then I know I need to have a New York reversal because there's no London reversal. If London didn't reverse, then I use London's range to reverse from. So here's London low. I want to see New York trade into this level and give me the same reaction that I was demanding that London does. So that's that expansion with expansion. This is where I look for SMT and stuff like that. So it's phase of price when we hit key levels. That's another one. And then there's also like drivers. So that's one of the best ones, to be honest, because when you have like a relevant low or something, or sorry, when you have like a relevant low of day or high of day or key level that price is within or something prior to a driver, the driver should expand away from that. And if there is no if there is no reversal, like I mentioned, like this example I just showed you, like this, there's always going to be a key level to reverse from. So that's when you pair it with a reversal. You pair the driver with the reversal. So if this is the driver opening price, so 930 trades into a level and the reverses from, that can also like you can pair it with continuation with reversal. So you can kind of confirm a lot of things. Just like waiting for the driver itself, like that's a filter in price as well. Just waiting for the driver to pass to confirm things. Not fading 4-hour expansion candles. That's another filter in price. Just yeah, those are the things I would say is a filter for price. Besides SMT, could you explain how to find the stronger, weaker assets? So what you want to look for is like whatever assets creating the higher time frame failure swing. That's always going to be the stronger asset. I don't have enough time to get really detailed into it, but that's what I want you guys to focus on. Like literally, just trade that higher time frame failure swing. You'll be much better off that way. But that's that can get pretty nuanced, that question. Samuel, I kind of answered that question. How do you go about trading continuation going to New York if you already have it? Oh yeah, so there's only a couple of ways that can happen. So either price has a Asia low of the day or something. That expansion that London and Asia created will either create a gap to continue away from, right? Or maybe it's going to create some failure swings or some relevant low to reverse from, like this. Maybe an order block or something. Maybe New York opens up within a clear set of opposing candles you can trade it from. That's really it, right? But if I go to some examples of that. My indicator disappeared. Here's some examples. So this is something I traded. I took 2 trades this day. So typically when like we have a reversal day and like Asia pretty much takes out the previous, if we're gonna reverse off like the previous week's high or like the previous day's low, and Asia hits that level and reverses, there's always gonna be it's gonna expand away, right, from that level. If it's going to reverse, and that expansion is going to create something. Like the previous session is going to create something to reverse from. So it's either like because here's like a gap right here, for example. This swing point, like I mentioned, we should expand away from it, or the swing point itself is creating a relevant low, as you see. Or reverse off that swing point. There's only 2 options there. So here's 930, as you see, expands into the low itself and reverses. So you're pairing a manipulation with a key level that was created prior to the driver's open, right? So here's 930, boom. What do we notice about the asset that swept? It's also putting that reversal signature in, right? Expansion with expansion, which is what you want to see. I took this on YM here, and I took a very tragic break even here. This is the things that you can't really anticipate, honestly, because I TP'd at this previous high. You're gonna see what happens. So at this point, like I'm going break even because price left my entry above like 2R and whatnot. You're gonna see that comes all the way back to my entry. So at this point, you can't really anticipate this that happens or whatever. But there's only a couple things that can happen at this point. At this point, we're already anticipating that this is probably a retracement. Why? Because, I mean, price is leaving failure swings, and there's no SMT here. So what would cap off that retracement? So this is pretty much answering question. What would cap off this retracement? It would be this opposing candle or a manipulation of these lows. That's the only thing that can happen because um, we're not likely to reverse, right? Because there's two things. There's two reasons. Again, well, oh my god, I don't know why it's doing it. There's only two ways, or there's only two reasons why we wouldn't reverse here. It's because of the failure swings to the highs, but also the candle profile doesn't really support it because we have the very, very large opposing run higher. So that's typically a bullish profile in general, right? So we want to trade in that direction. So what could cap off this retracement? Like I said, it's either this opposing candle. If we're not gonna find support there, then the low is your last line of defense. So that's what we have here. We actually manipulate this low, and then we expand higher. There's also another example here that I took. Here's the low of the day. It's Asia session. So when I come into New York session, there's really only one level to reverse from. It's this relevant low positioned above the current day's low. We have to manipulate this level. So here's a two-stage SMT here, which I also traded. So as you see that the driver should also do what, right? It should expand away from not only this manipulation, but just this current day's low. So that's what we have here. You have your initial CSD. Here's 930. I'm telling you, if you guys wait, if I was a new trader, man, I would do one of two things. I'd probably only trade days where it's like obviously clear framework, but I want to pair a driver with that framework, and I'd probably just trade 10 a.m. continuation a lot of times. It's either like you pair with 9:30 or 8:30, or you would just trade 10 a.m. continuation. Those are really the only things I would do if I was a newer trader because these are like the most consistent things you will see. I promise you. So this is what I took here. Right. Yeah, that's just a really, really, really good trade there. And I TP'd when NQ, I believe I TP'd when NQ hit this high because if I'm not mistaken, this is FOMC day. Yep, so FOMC. So I'm not expecting some huge expansion prior to FOMC. So you guys know when SMT breaks, that's typically when we can start to kind of fizzle out or get that retracement consolidation. That's exactly what we get. Price just kind of falls back into the range, bullshits. And these are things that you can already anticipate, right? So that was that day there. What's some other days? But yeah, there's always going to be some sort of invalidation level, typically. So I already showed you guys this example. We can go over this example too. This is something I traded, but it ended up reversing. But with that same logic, we can... Dude, why is my indicator disappearing? So weird. Alright. Here's the current day's low. It's Asia session. So what is above this low, right? It's these relevant lows, as you see. So you're seeing that we don't really manipulate them. We trade very, very past, or a lot past them, very far past them. Sorry, but we have an SMT here. So as you're seeing, this asset is actually finding support at a level like these opposing candles above this opening price. So that would just be this really. It would just be this form of it, right? Where we're seeing on NQ, it's more of like this here. But you're going to see that the driver is actually what confirms this. So I'm telling you, drivers are very, very consistent. So we have this SMT printed prior to 9:30. So if you have a key level being hit or an SMT prior to 9:30, but we don't yet reverse from it, as you see, here's 9:30. We have not yet reversed from it, clearly. So what should 9:30 do? It should reverse from there, right? So when it does do that, I mean, this is like it's like screaming at you that it's going to go higher. Like I said, one of the most consistent things. You guys see me trade around drivers all the time because, yeah, it's just like it's the best thing you could possibly do, to be honest. So why am I even anticipating this to expand higher? Well, it's because YM failed to manipulate this high. So if YM fails to manipulate this high, what should ES and NQ do? They should expand and catch up to this high. So that's what I traded here. Right, and yeah, pretty simple there. I traded a candle 2, by the way. So you guys see me kind of bending the rules, but it's with good intent, right? It's using drivers, it's using YM failing to manipulate its high. And like I said, around these drivers, I mean, price is just going to expand. It's not going to wait for your candle close, I promise you that. If it has a small wick and whatnot, it's just going to expand, bro. So yeah, around drivers, you can bend the rules, but it takes a little bit more experience for sure. Yeah, those are some examples. We're probably gonna have a, definitely gonna have a what do you call it? A stream. I can't talk. A stream dedicated to this specifically, because yeah, I can get a little advanced-ish. What time is it, by the way? 11. Kind of at an hour here, guys. I don't know how much more I can really answer here. Do you demand specifically 2-stage SMT with every trade, or is there, if there's a 2-stage SMT? Yeah, so I will at reversals. So at reversals, I will demand some form of 2-stage SMT, but within continuation, away from reversal. So let's say I have a reversal here, price expands away. Let's say there's an open objective. It has to be an open objective for me. You guys know I typically always trade if there's an open objective. That's what I need to have. So if we expand, if we like retrace into a gap that's created from from this reversal, I do not need as much like confirmation within this gap for continuation. So just to put it simply, you don't need as much confirmation within the continuation. But at this reversal, for example, yeah, I need some form of like 2-stage. Did I miss something? How do you go about trading continuation into New York? Oh, I already went to that. I was looking here for C3. Oh, you're trying to long this? Okay, I see. Let's look. What day is this? Wednesday. Wednesday. I'm kind of back out of this. All right. Check this out here. Let's check it out. Okay, so there looks to be some form of Kraken correlation between these assets. So as you see that Euro has not traded into this high, and if this is a large range, yeah, okay. And then Friday was where? Right here. Oh, it's a short week, so yeah, let me look at this asset too. Oh, I see it. Pretty much here. So yeah, we already hit like objectives pretty much. And okay, I see it now. Okay, now I definitely see it. So check this here. You see that this high right here, like Tuesday's high, just got traded into over here. And you're seeing on Euro, we failed to manipulate. So there's like SMT's breaking. We traded way past that over here. So as soon as that breaks, this is like a form of, it's like kind of a form of 2-stage because, yeah, it kind of is. It's just, that's too advanced to explain though. But yeah, it's just a form of SMT's breaking, but it's really like just a relevant high. This is still a relevant high. I know you're marking out like whatever you're marking out, like really very far away. This level here, just within this area, it's still like relevant highs and lows. So what time frame are you marking this? I'm so confused. What time frame is that? Is it hourly or something? Oh, is it like right here? No. Oh, it's right here. Sorry, I'm looking at something totally different. Yeah, I found it now. Oh, now I see it. Okay, yeah. So these assets already like hit this high. So if like this asset right here, I can't talk. If this asset already expanded very largely, then you can't really expect it to continue high. It already traded into that daily fair value gap that's right here, or wherever the hell this is. Yeah, this daily fair value gap. So if this already had a large expansion in the correlated asset, then you can't really expect it to continue higher. And if you can't expect the strongest asset to continue higher, the weakest asset in the trade. This is the weakest asset in the trade that you're trading. This asset hit this high. They just broke the SMT. So remember, we're just breaking SMT. So typically that's when you can get some form of strength switching, right? Some sort of retracement on this asset. It's going to have a very hard time for this asset to continue higher. This is when you need to have like some form of pullback or something on these assets, right? To continue. So once these assets can continue, that would allow gold to continue, if that makes sense, right? So that's why this asset kind of fizzled out here. So this is where you look for some form of, if you want to see continuation, I'm looking at the other assets to maybe see if they also retraced and whatnot. So you're seeing that this asset retraced. What about if there's any two stages in this area? Let's check. This is what you need to see. This is where you want to see this asset here actually turn to the strongest asset to catch up. So I don't even know if I traded this day, so let's check here. Euro. Yeah, I see it. So check this out. You put in an SMT here. So remember I told you guys that you can have a two-stage SMT with swing points itself. So you have a crack and correlation between candle 1 and candle 2, and then candle 2 and candle 3, right? So that's what you have here. And this asset here is showing a very nice continuation signature. As you see, it's just consolidating. So the strongest asset consolidating, while this one is doing what? It's expanding, right, to catch up. So that's a tricky one though, but you are trading the weakest asset in the triad. So it's going to be hard, man. Every time you trade the weakest asset, it's going to be super hard. Now, I will say, like, if you want to trade, I might have took this on silver, bro. Yes, I took this on silver. So why did I trade silver? Again, the weakest asset. Look at these assets. They're all expanding, whatnot. I'm trading this asset here at the same time we created this gap. So why am I trading silver? So here's the difference, what you just saw. You saw that basically GBP has already hit objectives. It's already expanded. What's the difference between this asset though? Okay, boom, we're also in a fair value gap. The same way we were in a fair value gap on gold. You see that? But what's the difference here? Is when I look at the correlated assets on silver, we actually have objectives to still trade into. So there's actually a reason for the correlated assets, the stronger assets, to continue. So if there's a reason for the correlated assets, they're actually stronger to continue, that would give you a reason for silver to also continue. Does that make sense? So there's a very, very, very big difference there. So here's the middle asset, Euro, still has something to draw into. Or if I go to HG, this asset also has something to draw into, which is this high over here. So that's why I picked silver over gold, right? And that's why you see price expand. Does that make sense? Very, 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 very big difference there. I'm in a stage where I'm slightly profitable with a win rate around 50%. That's good. That's like a really good start, like for sure. You can make a lot of money with 50% rate. I can catch winners, but also missing a lot of good ones. I shouldn't catch, and I'm taking trades that are sub. Okay, I think I need to improve my precision on identifying the setups. Yeah, so you need to study your losses, like T-Trade says, because if you can eliminate just a couple of those losses, right? Just 20% of them, now you're probably way over the edge, you know what I'm saying? So if you study your losses, you can eliminate those losses, and maybe work on your risk management system. I see a lot of people that take losses that shouldn't be losses, or take losses that should be like break-evens or something like that. Or maybe you can mitigate your risk. So, for example, let's say you train the fractal model. Here's your first CSD or something, right? Here's your first CSD, and let's say you're entering off of this CSD or something right here. So boom, your entry's right here. When price actually, there's a couple ways this can look. When price actually leaves this area, bro, you need to be going especially 2R, you can make a hard mechanical roll. If it goes 2R, you need to be going break even. I see a lot of people they'll take losses like this. I'm like, what the fuck? You should not be taking loss in this. When you're like newer, you want to be making risk management as easy as possible. You want to be like protecting yourself as much as possible because if you're newer, you're gonna be taking like lower probable trades probably. You don't know the difference, so you need to be protecting yourself. You see a lot of people on Twitter that have like these P&L calendars. They like barely ever lose, bro. That's because they're going break even. I'm not saying you have to go immediately, but that's what they're doing. They're going break even almost immediately, like what Dodgy does. So they barely lose, bro. And it's not something you want to be doing, but it's not that bad to be doing with the right intentions. So, for example, like as soon as we create like an invalidation point, you need to be going break even. I'm telling you, if you do this, it's gonna really suck because you're gonna be taking losses, or not losses, but break evens. And price hits your break even, it goes without you. But dude, this is the quickest way to be profitable. I guarantee it. Is taking lower RR, like just keeping out 2R, and then protecting yourself as soon as possible. But it has to make sense, because I will say, I don't think the way they do it really makes sense. They just go break even on like off emotion, I think. But if you can kind of do that, then I'm telling you, like you should be really that would really help you out a lot. If you're gonna take a position entry like I do a lot of times, we're gonna enter off the first CSD. As soon as we mitigate this area and then create an additional CSD, I'm moving my stop loss to here, so I don't take as big of a loss. Like that's another thing you guys can do. You don't have to take a full loss. If price tags your entry or your area that you're entering off of, so let's say you have this opposing candle that you're entering off of, right? Price trades really deep into it, and then it goes like this. Your stop loss should not be here, bro. Move it to here. It shouldn't be here. Move it to here. I guarantee you, majority, like 9 times out of 10, it's not going to do this, bro. It's not going to come all the way back down here, leave equal lows, and then go without you. It shouldn't be doing that if you're actually entering a true reversal. Price shouldn't be retracing like this. So you can move your stop loss here, right? So if price does come back, it's likely going to take out this low too. So you're not taking as big of a loss. And I'm telling you, like little stuff like this adds up, right? So I would just recommend doing that, man. That would probably take you over the edge. Like little stuff like that. What's up, donuts? By the way, I got a lot of messages. What was that about? But we'll have um, a stream on trade management as well. So I traded this as well. So on silver, I think I took like, I forgot where my entry was. It was around here somewhere. But as soon as price really starts to expand away, bro. For example, I think I entered like off of this CSD or something like that. I forgot where. But as soon as you start to expand away, like start to move your entry, right? When you see like these deeper retracements, that's when you should do it. Because price should not be doing this, bro. Shouldn't be doing that. You know what I'm saying? But we'll have a stream on that pretty soon or something. Also a profile stream. That's probably the next one or something. But yeah, guys, I'll probably catch you guys later. Y'all have a good weekend. And good luck next week.